Hello, friends. Welcome to Nirmal. I'm Piyush Jain, and today we're going to be talking about a result-led conversation. We're talking about Skipper Limited, and joining us on the show today is management, Mr. Sharan Bansal, the director of the company. Sharanji, welcome to the show.
Hi Piyush, how are you doing?
I'm doing good, and I remember our last conversation where we were actually talking about how order book has been growing very fast, and overall the market actually was looking quite good from a perspective of order commentary. And if I look at the recent quarter, 80% revenue growth again, basically when you're talking about, and also again, basically we actually are seeing exports doing really well, almost 20% share in your business, and again growth has been really very strong there. Also again polymer business basically has done good, sort of good growth there. So broadly looking like another set of good numbers. Help us understand how has been the sort of volume growth in this quarter.
So I think you rightly pointed out that order inflow has been quite strong in last financial year as well as this financial year also. Typically our order inflow used to be in the range of 1,500 to 2,000 crores annually, and our that was reflected in our top line also. However, last year we had an order inflow of close to about 4,000 crores. This year, in the first 9 months, we've got about 3,100 crores, and I think likely we will close the year also with 4,000 crores. That has now started reflecting in our revenues, and where we should see likely a 50% jump over last year. Last year, about 2,000 crore top line. We should comfortably end this year with approximately a 3,000 crore top line. This was obviously much higher than the beginning of the year guidance we gave of 25% CAGR growth. So this year will be close to about 50%. And I think looking at the tailwinds that are there in the sector right now, we are in the beginning of a sustained long run for continuous order inflows, both on the domestic side as well as the international side. Because in India, the way we look at it is that there is a clear-cut investment roadmap made by the government up till 2030 for transmission investments of about 2.4 lakh crores. Internationally, we see that thanks to the stress on renewables and the various targets that various countries have taken towards achieving net zero by 2040-45, that is leading to a good growth in renewables. I think also the Russia-Ukraine war has something to do with it, where countries are a lot more serious about investing in renewables now than what they were earlier. So overall, we see no problem in continuous volume expansion. Now only the constraints are capacity, and I think we should be finalizing our capacity expansion plans now soon, because this now we are sort of now getting close to about 85-90% capacity utilization in the coming quarter.
And how much time do you actually need for really building up capacity? Suppose, for example, you take the decision. Obviously, it's going to be brownfield. I'm guessing that. Please correct me if I'm wrong. And then you
Yeah.
actually start putting in the sort of incremental capex there. How much time it really needs for you to sort of complete that and commission it?
So the capacity expansion, the way we look at it, it will be a mix of brownfield and greenfield expansion. Brownfield will obviously be done much faster than greenfield. However, looking at the market opportunity, we will be taking a call on both of those, and at least get the brownfield capex underway very soon, so that when that capacity comes online sometime during the next financial year. Greenfield will obviously take some more time. Maybe we'll see that in FY26, we'll get the benefits of that capacity.
And have you already taken a decision, or it is yet to be determined?
No, we've not. We intend to take that during this quarter and hopefully come back to you with that news.
And that's what I was asking you. Suppose if you take a decision, how much time you really need actually to sort of commission that? Is it like 12 months, 6 months? How much time you usually, or as per your last experience you took?
The brownfield expansion should be done in about say, 8 to 9 months, and the greenfield likely will take about anything between around 15 months approximately.
Right. So basically, if anything, any decision is going to be taken, the impact is going to be felt in FY26. to be fair.
The brownfield, likely we should see some impact in FY25 also.
Okay. And since you're already actually reaching almost 80-85% of utilization, that implies on the margin side, basically already about, if I take a look, almost basically for the quarter, the margins actually have improved. And we're talking about 9.6% EBITDA margins. At such a utilization, margin is function of only two things. One is your utilization, and second basically is your product mix. So right now, peak utilization. So perhaps we have already seen the best. Any scope for further sort of improvement in the margins from here?
For sure, because you see our engineering product, which is our largest segment, there we are comfortably delivering 11 to 12% margins.
Okay.
Now, at a blended level in the company, our margins go below 10% because of our PVC and infra division. However, having said that, both these divisions are growing well. Our PVC brand is getting more and more accepted in the market. We do hope, industry averages are about 14% margins. We are currently at 6 to 7% margin in this business. So there's a lot of headroom to grow in PVC margins. Even on the engineering side, as we, because now it's a seller's market. So obviously we do expect to do better than, the 11-12% margins that we have been delivering in this segment. We are quite optimistic that in the coming years, there should be a possibility to have a good growth in that number as well.
Sure. And just a recap from the perspective of incoming orders, and now you're sitting order book. What's the percentage of engineering in that order book?
The order book completely is made up of engineering and infra segment because on the polymer side, we do not carry any order book. That is a completely B2C business. So we are selling through our dealer, distributor, retail network, which is very, very strong in East and North India. We are growing our presence in West and South India now also. However, that business doesn't really carry an order book to speak of.
Right. So will it be fair to say then actually that the margins are bound to go up because you have a very, very strong engineering order book?
Absolutely, for sure.
Right. Help us understand basically from the perspective of the order book, which is now almost four times of your sales. Like, what is the sort of timeline of completion of most of the orders? Are there any slow moving orders, or usually 2 years is something where you're looking as an execution average execution time?
You're right that the order book present is about 3.7x of last year's sales. However, looking at the sales growth, which the company will have this year as well as next year, you can assume this order book to be executed over a span of roughly 2 years, 2.5 years is when this order book will be executed. However, honestly, there's no constraint for picking up more orders. Right now, the only constraint is our capacity and execution. So honestly, there is a lot of business available. Like I said, both domestically and internationally. So honestly, we don't see any challenge in getting continuous growth for the next several years.
Right, and you actually did conclude a successful fundraising. From that perspective, all the capitalization done for the next 1 to 2 years.
Yes, so I think the fundraising was you're right that we closed it successfully, a rights issue of about 200 crores size, and it was for the existing shareholders of the company. And yes, we got a very good response from our shareholders. We're very thankful for that, and the issue was oversubscribed by about 1.8 times, and I think that will help the next phase of growth in the company where this 200 crores of equity will go towards supporting the long-term working capital needs of the company.
Sure, and a word on right now. What's the total net debt on the books?
Our debt is, as of September, was approximately about 700 crores. That includes both long-term as well as short-term working capital.
Did you say 700 crores?
700 crores, that's right.
Okay. And right now, sort of any plans to sort of basically, what's the average blended cost before I ask that question?
So I'm assuming you're trying to get to the calculation of the finance cost in the P&L. Our average cost of debt is approximately 9%. 8.5 to 9% is what
That's
our
very
average.
competitive. Yeah, very
Yes,
competitive.
yes, and of course, the finance cost that you see in the P&L is not just made up of the debt interest, it is also made up of various interest paid on bill discounting, vendor bill, customer bills, bank guarantee charges, margin charges. All of that contributes towards the finance charges of the company.
Fair enough, fair enough. And basically, if you look at the sort of the revenue mix which we have right now, engineering is almost 72%, bound to go up. Order book actually is very strong. Now, let's talk about from the perspective of client commentary. How's the market sort of looking to you? What are the clients telling you? Broadly, how are the export markets looking to you?
There was an interesting statement by the Honorable Power Minister Sri R.K. Singh at a recent business summit, where he mentioned that for after a long time, government is now relooking at making investments in the thermal generation as well. As you know that there hasn't been much investment on the thermal side under the Modi government, both NDA 1 and NDA 2, last 10 years. However, now looking at the kind of growth, India did have a growth of about 9% in the peak power demand. So that now suddenly we are at a situation where probably, according to the power minister again, for the next 20 to 30 years, right up to the growth phase of 2047, India will be looking at a situation of more demand than supply. So this is a very healthy situation for the power sector, both on the generation side and for companies like us who are active in the power transmission side. So I'd say that that is something which we are very, very enthusiastic about. On the international side, as I was mentioning, we see a lot of urgency in investments in the renewable, in bringing more renewable power into the power mix of various countries. This is what will lead to growth in transmission investments. The Economist magazine, they estimate that the investment required in power transmission needs to go up to $1.1 trillion a year, right up till 2050. So I think this is a multi-decade opportunity the way we look at our business, both internationally as well as domestic.
Sure, and I was looking at your order pipeline. Looks to be a 1,500 crore, or I would say 15,000 crore plus order pipeline. Help us understand where actually you're looking at these orders, or which
Uh,
sectors.
yes, absolutely. Bulk of them are in the power transmission and distribution sector. We are looking at certain interesting opportunities in the telecom space as well. However, as of now, the 15,000 crores, roughly the split is about two-third, one-third. Two-thirds is international and one-third is domestic. That's also a function because international orders, they do have a long gestational time from RFQ to bid finalization. So that's why we see those those projects in the pipeline for significantly longer than the domestic bids, where domestic bids they come in the market and then they get finalized very fast. At least right now, that's what's happening in India. So yeah, so I think considering that we had order inflows of 4,000 crores last year, likely 4,000 crores this year, and a 15,000 crore pipeline, there definitely should not be a situation where we face any constraints on the selling side. Now, I think the main challenge will be, of course, execution and our capacity building.
Right. A quick question, quick touch on the polymer segment also. Like since we are in the middle of government's scheme of Har Ghar, basically Jal. From that perspective, like how basically is the demand looking to you? Because you're very strong from the perspective of your manufacturing capacity in the Eastern India. So how's the demand there?
Polymer side, the demand continues to be strong. We did have a very good volume growth this year, close to about 50%. Uh, that has not translated fully onto the top line of this division because polymer prices have cooled off significantly compared to last year. So that's why we don't see it translating fully to top line growth. There is some amount of top line growth, but not to the extent by which volumes have grown.
But have
Also,
the prices largely normalized, or this is looking like a correction which is going to bounce back?
That is a $1 million question, Piyush. Honestly, where commodities are concerned, really every time we think, okay, this is the bottom, but then, a new bottom is discovered. So honestly, I think until and unless the Chinese market start recovering, which doesn't look like a possibility anytime soon, I don't think commodities we are going to see we don't expect a significant bounce back in any commodity prices, whether it's PVC resin or aluminium or steel or zinc, etc. I think they will largely be stable, or we might see further correction from here on also. So I think, I think I was talking about polymer business growth. We have launched successfully our ad campaign, our national ad campaign with MS Dhoni and Chris Gayle last year, and that has got a very good response from our trade network. And I think we will continue to grow our brand from strength to strength, and hopefully translate into higher and higher volumes in the coming quarters.
Well, sounds good. We extend our wishes to you for the upcoming March quarter, and we'll again connect with you on the performance in the March quarter. But for now, thanks a lot, Sharanji, for coming on the show.
Thank you so much, Piyush.
And dear viewers, hope you enjoyed this conversation. For now, it's a wrap on this conversation.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.